You got three Wall Street investment firms. BlackRock, you're familiar with BlackRock, they're
Vanguard
giant.
and State Street.
Exactly.
When Bernie Sanders talked about firms like BlackRock on the Joe Rogan podcast, it really highlighted something critical. Most individual traders and investors are constantly losing money to these giant Wall Street firms. It feels like there's nothing we can do about it, right? Well, wrong. There's actually a way, an elegant strategy that's based entirely on their buy and sell behavior. All we have to do is copy them. I've been using this strategy for the past 11 years, and it worked incredibly well for my own investments. And I'm going to share it with you today. Yes, we can't go head to head with these huge corporations, but we can follow their moves and make money alongside them. I'll teach you how I've been replicating their market behavior in my own trading and how my accounts exploded after I started doing that. But first, let's take a look at the cold shower that Sanders gave to Joe Rogan's viewers.
Here's a fact. When we talk about it's not only income and wealth inequality that bothers me, it's concentration of ownership. So right now in America, in virtually every sector of our economy, whether it's agriculture, transportation, financial services, whatever, you got a handful of giant multinationals controlling that sector. But here's another amazing fact. Who do you think owns these corporations? You know, you remember there was a day where somebody actually owned General Motors or owned Ford. Mm-hmm. They're now owned by Wall Street firms. Check it out on Google. They are combined, the three of them combined, are the major stockholders of 95% of American corporations. How's that?
That's not good.
That's power.
Right. How did that start, and what could have been done to stop that from happening?
Well, I think it's greed. These guys are smart. They're hardworking. They're motivated. They want more and more. So if I can buy this, I can buy this, I can sell this.
Right, but they're all doing it within the law, right?
Yeah.
Right,
but,
which is that the problem?
Yeah, but who makes that law?
Well, I couldn't agree more. During his discussion, Sanders specifically called out three major asset management firms: BlackRock, Vanguard, and State Street. These three entities alone boast combined holdings that grant them unmatched power and an incredible amount of influence over a vast majority of the United States financial landscape, and by clear extension, the entire global market as well. To be truly honest, I generally don't believe anyone can fully wrap their mind around just how absolutely massive their collective holdings have become. Their reach is simply staggering. Any data that is publicly available merely scratches this very surface of just how enormous these three financial giants truly are. They quite literally own, or at the very least exert, significant control over the vast majority of the stock market through their extensive offerings of index funds and exchange-traded funds, commonly known as ETFs. An ETF, or exchange-traded fund, is essentially a type of investment fund. It's designed to hold a diverse collection of underlying assets, such as individual stocks, various bonds, or even commodities. But it possesses a unique characteristic. It trades seamlessly on major stock exchanges, like individual company stocks do. You can effectively think of these firms in this context as massive brokers who collect a small, yet significant percentage from every single buy and sell order that transacts through their ETFs within the framework of the stock market. These powerful ETFs are remarkably accessible to practically everybody. Whether you're going through traditional banking services, using private investing platforms, or simply using modern investment apps, virtually all of them leverage these ETFs to facilitate owning shares in the stock market. This accessibility makes them a hot item for retail investors, individuals just like you and me, looking to gain exposure to the market with ease. This dynamic has led to these major firms actually owning portions of real companies, startups, tangible products, factories, hospitals, pharma, numerous retail stores, you name it. Their strategy is straightforward. They simply need to buy aggressively and systematically, accumulate the largest possible chunk of available shares. And crucially, they possess both the immense capital and the means to execute this strategy effectively. Let's put this to the test right now. If you were to go onto TradingView and select virtually any large cap stock or major index you might consider trading, I can confidently tell you that BlackRock, Vanguard, and State Street collectively own more of that asset than all other investors combined. The only possible exceptions might be the CEOs and the founders of these very companies themselves. Simply put, the true foundational owners of the entire stock market are not regular investors, nor is it the American government. They are these three colossal firms, alongside a number of other smaller, yet still significant banks and entities that compete at this level. But their influence doesn't stop there. Beyond outright ownership, these firms also function as massive resellers of the entire stock market. Consider BlackRock, for instance, with their vast array of iShares ETFs. These funds are designed to track the performance of major indices like the S&P 500, for example. Their reach extends even further. They own a significant Bitcoin trust named IBIT. They hold direct investments in physical gold through iShares Gold Trust IAU and in silver via SLV. They are deeply embedded in energy sector equity ETFs, various commodity index trusts, and literally hundreds of other sector-specific ETFs. Their presence is truly all over the financial landscape. What's particularly interesting about this investment model is the underlying structure. These major firms, like BlackRock, are the actual owners of the physical shares, the gold, the silver, or the actual Bitcoin. On the other side, what individual investors are holding are merely shares of the ETF itself. So in essence, BlackRock, for example, acts as a custodian holding your proportional shares on your behalf. But critically, you, the investor, never have direct ownership of the real thing. You still rely entirely on them to facilitate the liquidation of these underlying assets when you decide to sell. If these institutions fail, for any reason, you will not be able to liquidate these assets, and that's a risk you will have to carry. But there's an even more intriguing aspect to their structure. BlackRock and firms like it do not simply buy when you decide to buy. Quite the contrary. They behave exactly like Walmart. They buy in bulk at a discount when the underlying asset is firmly in a demand zone. And because they own massive pools of liquidity, this gives us the ability to buy and sell any given time, and in virtually any quantity we desire. So the process is actually pretty straightforward. They expertly buy at these discounted demand levels and then sell to retail traders, aka their own customers, at inflated supply levels. Now, can you possibly imagine the sheer wealth they are generating in this process? Vanguard, on a similar note, is widely recognized for the immensely popular VOO ETF, which meticulously tracks the performance of the S&P 500, and the VUG ETF, which specifically focuses on large cap stocks. They too offer a comprehensive suite of additional ETFs covering the energy sector, gold, silver, Bitcoin, and many other financial instruments, mirroring the broad reach of their counterparts. Then there is State Street, standing out for the exceptionally successful SPDR ETFs. These have indeed cultivated a widely recognizable brand within the investment world. Their notable offerings include widely traded tickers such as SPY, which tracks the S&P 500, the DIA, which follows the Dow Jones Industrial Average. Both of these are huge ETFs with undeniable market presence. Now, let's take things up a notch. The central question becomes, how exactly can we, as individual traders, effectively replicate or at least closely follow their buy and sell behavior? This is precisely where the situation becomes highly profitable for us, as we observe these powerful entities profiting from every segment of the market. It is our turn to claim a piece of that pie as well. We can achieve this by using the same types of recommendations and insights that their own traders and asset managers employ to generate their profit. Now, the most significant fundamental difference between these large institutional traders and us is that we simply do not receive a morning call sheet detailing our every move. We have to create our own buy and sell recommendation. And this is precisely what I'm about to show you right. How can we truly trade like a firm such as BlackRock? It might actually shock you how straightforward the process can seem. Now, it's not inherently simple, but my 11 years in this business have made it easy for me to explain it in just a couple of minutes. So here we go. Fire up TradingView and select the gold futures chart. You can find it under the symbol GC1. I'm going to share with you the most effective way to identify optimal price entries for buying gold for a long-term investment. Let's begin by loading up the COT net positions indicator. This indicator is built entirely on the buy and sell behavior of institutional traders within the futures market. It's crucial to understand it's not derived from historical price data. No, it is directly based on actual market orders. When significant market orders are placed and move through the system, price subsequently moves. It's not the other way around. Therefore, this indicator is generally predictive of future price movements. Unlike, for example, the RSI, which only reacts and moves after the price has already moved. This is a very big difference, guys. If this concept is confusing or unclear, please feel free to leave me a comment and I will gladly provide a more detailed explanation. Okay, so what are we looking at here? This is the commercials version of this indicator. And by commercials, we mean banks and institutions. Every time this indicator is in a peak, this means institutions like BlackRock are buying gold aggressively. And we should do the same. Let me put a few vertical lines here for backtesting. See how every time this indicator was in a peak buy, what happened to price afterward? It exploded every single time. When the COT is telling me to buy, all I need to do is find the nearest demand zone on the weekly time frame and buy, either for long-term investing or to get biased on a swing trade. The data from the COT combined with supply and demand is incredibly powerful to time the market exactly like these institutions are doing. And I've made a promise to share my entire supply and demand course with you guys. And I've kept this promise 16 times so far. So a sub to the channel will be a nice return on that investment. Quick reminder, I showed you the COT indicator on the gold chart, but it works on all assets and instruments as well. Forex, metals, Bitcoin, you name it. You don't just take my word for it, hear it from our students who use the same strategy to make consistent profits every day in the market. Take a look at these achievements from our students in the past 6 months. Do you see a pattern? Well, aside from the obvious fact that every single one of them is profitable, there's something else striking. Notice how nearly 80% of the students typically choose account sizes between $50,000 and $100,000. This is a common approach for our traders when managing risk. They understand risk is necessary, but they keep it under control by starting with more moderate account sizes. This means that from our sample of roughly 3,000 students, which is a truly significant sample size, a strong 80% fall into this category. This clearly shows that these students are actively seeking opportunities, willing to try every smart strategy to succeed in this highly competitive trading environment. This kind of access and potential simply wasn't available to them anywhere from 10 to 100 years ago. So honestly, you really don't have an excuse now, especially since I've been discussing these very same strategies for the past 2.5 years. Of course, if this is your very first time watching me, then fine, you're off the hook. But every single strategy in my entire library, without exception, is built on following the footprints of major financial institutions. This is exactly what we focus on and do every single day here at the campus. Yes, I admit, we can never be as good as the institutional traders. They are definitely the Lionel Messi of this game. Actual Messi and the FIFA all in one, because they also make up the rules of the game. And they get the lion's share of the entire trading volume. But here's what we can be. We can be the underdog. What we can successfully do is meticulously replicate their strategies and time our entries and exits with true supply and demand principles. Over the long term, by consistently applying this approach, you will eventually find yourself making more money than you lose. And as you hone your abilities and strategically scale up your accounts, you will gradually realize that you are indeed ahead in this race towards financial freedom. However, this is only possible if you truly understand how to properly align yourself with the smart money. You will simply never generate real substantial money from trading and investing if you consistently find yourself on the opposite side of these mega players. Now, because most of my regular viewers are traders, much of this is in-depth knowledge I'm sharing here on the channel regarding firms like BlackRock and figures like Warren Buffett has been limited to a specific niche audience. But guess what? Now the genie is out of the bottle, and even the most mainstream podcast on the internet is discussing it. More of this knowledge will become widely accessible to the broader public in the coming years. And I'll tell you why. Independent politicians, such as Bernie Sanders, are closely observing the massive wealth gap that is currently ripping the middle class apart and, in the process, choking small business owners. One of their direct countermeasures is to go on popular podcasts and publicly challenge this entire make the rich richer agenda. That was the core message during the podcast with Joe Rogan. It's obvious that there's a new objective to spill the beans and arm regular investors with these initial bits of knowledge, intending to kickstart this race against entities like Vanguard and BlackRock. I can only predict that we will see a surge in new traders actively joining this game in the coming few years. Consider all factors at play here: a challenging economy on one side, artificial intelligence rapidly consuming a big chunk of traditional jobs on the other, and influential public figures like Sanders talking about the ridiculous influence that major financial institutions hold in markets today. Put all of that into one equation, and I think the answer will be precisely what Jonah Hill famously said in The Wolf of Wall Street.
You show me a pay stub for $72,000 on it, I quit my job right now and I work for you.
And this brings me to another important promise I'm making directly to you. I'm committed to always bringing this kind of market knowledge straight to your YouTube feed. You can count on it, and it doesn't cost you more than a like to this video and a sub to the channel. See you on the next one.